Good afternoon, ladies and gentlemen. For those joining us from across the region and beyond, welcome. I'm Janwarto Alamsyah, or you can call me Toto, Executive Director of the ASEAN Federation of Accountants, or AFA, and I'm pleased to host today's critical discussion, Navigating Global Trade Disruptions Amid Major Changes in U.S. Trade Policy. Colleagues, 2025 has been a monumental year. We are operating in a landscape defined by the most aggressive shift in the US trade policy since 1930s, specifically the introduction of the Liberation Day tariffs earlier this year. Earlier this year, we saw introduction of the so-called Liberation Day tariffs, which raised average effective US tariff rates to historic highs. Since then, the situation has evolved rapidly. Just last month, during the ASEAN summit season, the Trump administration announced new reciprocal trade frameworks with several of our neighbors, especially Vietnam, Thailand, Malaysia, and Cambodia. While these agreements offer some relief, they come with strict new conditions that create a complex, fragmented reality of our region. To decipher this, I'm joined by two distinguished experts, Jonathan Ashworth, Chief Economist at ACCA, who will share findings from his report on the future of global trade and the third quarter 2025 Global Economic Condition Survey. Secondly, we will have Dr. Duan T. Tanha from the Economic Research Institute for ASEAN and East Asia, or ERIA, ERIA. Dr. Duan will be joining us immediately after Jonathan's presentation to provide the ASEAN perspective. But before we entering the core discussion, we will have a photo taking session. So I will ask our operator to conduct for the photo taking session.
Okay, on my three, ladies and gentlemen. 1, 2, and 3. Another one. 1, 2, and 3. Thank you.
Thank you, Monica. So Jonathan, are you ready? So let's start with the global outlook. The floor is yours. Please, Jonathan.
Well, thank you very much, Toto. I'll just share my presentation. You all see my presentation now?
Yep.
Well, good afternoon, everybody. And thank you very much once again for inviting me to present today. I think the sentence on the slide above captures the key takeaway from my presentation today. The global economy has been resilient this year, despite the major global trade disruptions, but downside risks still clearly remain. US trade policy uncertainty absolutely soared earlier this year after President Trump enacted much larger than expected tariffs on most of the US's trading partners. But as you can see from the chart, trade policy uncertainty has come down quite meaningfully from its peak, but it still remains very elevated by historical standards. And a key event to watch in the next couple of weeks and months is a ruling by the US Supreme Court on whether or not part of President Trump's tariffs are illegal. So that's a key area of uncertainty to watch in the next couple of weeks. Despite the various trade deals the US reached with its trading partners, and despite the various tariff pauses, 2025 has seen a significant increase in the US average effective tariff rate. If you look at this chart, the red line shows the average rate since 1790. And what's very, very evident is that since the end of the Second World War, average tariff rates in the US have been very, very low, particularly in the last couple of decades. It averaged 2.4% in 2024. But the average rate has surged this year to around 18% at the present time, the highest rate since the 1930s. So what we're seeing is a major change in the trade policy of the world's largest economy and a country that's been a key driver of the opening up of the global trading system in the post-World War II era. And this is going to have profound consequences for global trade patterns over coming years. Given the momentous changes we've been seeing in trade this year, ACCA recently produced a major report on the outlook for global trade. A key part of this was a survey of business leaders from around the world. Most of the survey questions had over 500 responses, and CEOs and CFOs typically accounted for around 45% of responses, and C-suite executives as a whole around 2/3 of responses, and multinationals accounted for around 80% of responses. I'm just going to quickly take you through some of the key findings. I don't think I'm going to surprise many of you when I tell you there was quite a lot of concern about recent trade developments among business executives. But in general, business executives remain relatively optimistic about future trade prospects over coming years. If you look at the right-hand side chart, this shows survey responses to the question, to what extent do you see your organization increasing or decreasing their amount of global trade in the next 3 to 5 years? The red bars show the responses for the survey sample as a whole. The burgundy bars show the responses for C-suite executives. Around 28% of all survey respondents expect their firm's global trade to increase significantly over the next 3 to 5 years, and a similar proportion expect it to increase somewhat. Only a very small proportion expect it to decrease significantly. And interestingly, C-suite executives are more optimistic than the overall panel as a whole. We also asked business leaders how they viewed the various risks and opportunities in global trade over coming years. The left-hand side chart shows the top risks or barriers for global trade, according to business executives over coming years. Unsurprisingly, in first place, cited by 38% of respondents, was geopolitical tensions. And that was followed in second place by international or civil conflicts and wars. And in third place, we had protectionist policies in advanced economies. Fourth place was supply chain issues. And that's very much related to the top 3 cited risks. Just turning to the right-hand side chart, this shows the top rated opportunities. Way out in first place, cited by almost half of total respondents, was the opportunities to use technology, for example, AI, to help facilitate global trade. And this likely reflects various factors, such as the use of digitalization to help boost overseas sales, and the use of AI and other advanced technologies to improve the efficiency of trade-related processes, and also the efficiencies of businesses more broadly. In second place was the opportunity to diversify production, investment, or the location of suppliers. And in third place was the opportunity to gain access to new technology. Then in fourth, fifth, and sixth place, we had the opportunity to enter fast-growing markets, enter new markets, and the opportunity to strike new free trade agreements. Since the global pandemic and Russia's invasion of Ukraine, there's been a significant focus amongst business leaders and governments about supply chain resilience and diversification. And in the left-hand side chart, we asked business executives, does your organization plan to move their production, investment, or location of suppliers in the coming years using any of the below processes? And I won't go into too much detail here, but almost half of all respondents expect to engage in either onshoring, nearshoring, or friendshoring, whilst just over a quarter of all respondents still expect to engage in offshoring. So these results just generally support the view that we could see quite meaningful changes, further changes in global trade patterns over coming years. And just finally, in terms of the survey, I think many economists like me remain quite worried that greater protectionism is likely to push up costs for firms and businesses and households over coming years. And the results from our survey certainly would support this view. The right-hand side chart shows responses to the question, how do you expect your organization's costs will likely change due to changes in global trade in the coming years? And around a third of respondents expect their costs to increase by more than 10% due to changes in global trade. And around 45% expect them to increase by up to 10%. So, changes in global trade are looking to be inflationary. Moving away from our survey of global trade, as I mentioned at the start, the global economy has been more resilient than expected so far in 2025. And this likely reflects various different factors. I think, first of all, most of the US's trading partners didn't retaliate against the US's tariffs. So we didn't get a 1930s style tit-for-tat trade war. At the same time, given market pressures, President Trump enacted tariff pauses on many countries. As well as this, many countries front-loaded their exports to the US earlier in the year to get ahead of those tariff increases, which helped boost their economies. And the impact on US inflation from tariffs has so far been less than expected. And in addition to all this, we've had this ongoing global AI boom that has supported the global economy. But I think the risk is we could get some moderation in global growth over coming quarters. And I think that likely reflects some unwinding of that front loading of exports we saw earlier in the year, continued elevated uncertainty and caution amongst businesses and consumers, and also as high US tariffs increasingly work their way through the global economic system. And our flagship quarterly survey of global accountants would certainly seem to support the view that the risk is for some slowing in global growth. I won't go into too much detail here, but the dark blue bars shows the closely watched global confidence index amongst accountants. And after some recovery in the second quarter of this year, confidence fell slightly in the third quarter, and accountants' confidence still remains quite low by historical standards. And the turquoise line shows that the forward-looking new orders index, what accountants say is happening to orders at their firms. And this fell in the latest quarter and is at its lowest level in the post-pandemic period. So overall, I think our key indicators in our survey generally support the view for some moderation in global growth. But it's important to stress, they're certainly not suggesting that a material slowdown in global growth looks to be in the offing anytime soon. The red bars on this chart show changes in confidence amongst accountants in the different regions in the latest quarter. And I won't go into too much detail here, but if you look at the right-hand side of the chart and at the bottom, you can see there was actually quite decent improvements in confidence amongst accountants in North America and Asia Pacific in the latest quarter. I think the gains in North America probably reflect the ongoing resilience we're seeing in the US economy, and obviously stock markets which have been breaking new highs until recently. But it's important to stress confidence amongst North American accountants is still at a low level by historical standards, as are many of the other key indicators for the region. And the rising confidence in Asia Pacific put confidence actually slightly above its historical average. And the new orders index for Asia is also above its historical average as well. And there could be several factors contributing to this. The greater than expected resilience in the global economy, the ongoing global AI boom, because that's been boosting technology exports from Asia Pacific. Some easing in global trade tensions has probably helped, but also we're continuing to see relatively decent domestic demand in many economies in the Asia Pacific region as well. In our survey of accountants, we also asked them about cost pressures at their firms at the present time. And if you look at the left-hand side chart, this shows the percentage of global accountants reporting increased operating costs. And you can see this series is still quite elevated by historical standards, still meaningfully above the median reading over the survey's history. But this elevated cost pressures is very much being driven by developments in the Western economies. Cost pressures are very intense in the United Kingdom at the present time, and cost pressures are also above average in North America, likely reflecting the impacts of tariffs. In Asia Pacific, cost pressures appear similar to their historical long-run average. And just finally, in terms of our survey of accountants, each quarter we ask them what their top-ranked risk priorities are. The red bars on this chart show the readings for the third quarter of 2025. And I won't go into too much detail here, but it's not surprising that the top-ranked risk was economic-related risks. And in second place, we had international and geopolitical instability. In joint third place was talent scarcity and skills gaps, and technology-related risks, such as cyber security. So turning away from our survey of global accountants, I just want to look briefly at the developments in some of the world's largest economies. Given the US government shutdown recently, there's been quite a lot of fog surrounding the US economic data. But there are some important trends evident at the present time. The left-hand side chart showed the 3-month moving average change in US employment. And what you can quite clearly see, there's been quite a slowing in the US labour market so far in 2025. And that's been the key reason why the Federal Reserve has pivoted to interest rate cuts over recent months. It wants to preempt the risk of a more pronounced slowing in the US labour market, which could potentially lead to big layoffs by firms and would increase the risk of a US recession. But the Fed is having to walk something of a tightrope at the present time. You see, if you look at the right-hand side chart, you can see that inflation on the Fed's preferred measure still remains above target at the present time. And it's been consistently above the target for 4 or 5 years now. And the risk is that tariffs could put further upward pressure on US inflation over coming months and quarters. So the Fed needs to proceed quite cautiously. If the boost to inflation from tariffs is much greater than expected, that could make it difficult for the Fed to continue to cut interest rates. And perhaps the risk would be for a stagflationary style scenario in the US. On the other hand, if the pickup in inflation due to tariffs still remains quite muted, that would allow the Fed to continue to cut interest rates, which would be quite helpful for the US economy. Despite the slowing in the US labor market, the economy as a whole has remained relatively resilient. And a key factor behind that has been the ongoing AI boom. If you look at the left-hand side chart, you can see that consumer sentiment in the US is quite low at the present time. However, consumer spending has been quite strong recently. And a key driver behind this has been the spending by rich Americans, and their wealth has been boosted by this ongoing AI-driven stock market boom. So that's been a key support to the economy. And the AI boom has been helping the US economy, not just on the consumer side, but also by boosting business investment. If you look at the right-hand side chart, this shows the quarterly changes in investment by firms in information processing equipment and software. And you can see that the changes have been quite high. The increases have been quite large over recent quarters. And you're also getting strong investment in data centers in the US. Overall, growth in the United States is going to be slower this year than in 2024, but the economy should still increase by close to 2%. And growth of around 2% seems likely in 2026 as well. I think you're probably going to get some further easing in monetary policy that will support the economy. Fiscal policy could be quite helpful to growth next year as well. And the AI boom should continue to support economic growth. The big risk to the US on the downside is if tariff-related inflation is much larger than expected, and also if what some people describe as an AI bubble, if that was to burst, that could have quite negative consequences for the US economy. Turning briefly to the world's second largest economy, China, despite the big increase in US tariffs, growth in China has shown a fair amount of resilience until recently. And one of the drivers behind this has been the ongoing strength of Chinese exports until recently, because that's been supporting strong gains in industrial production. Despite falls in Chinese exports to the US this year, China has benefited from strong export growth to regions such as the ASEAN region, Africa, and the EU. And that's offset weakness in exports to the US. So the external side has been very helpful to China's economy. But China's domestic economy is looking weaker at the present time. You can see from the left-hand side chart, retail sales are growing at around 3% currently. And if you look at the right-hand side chart, you can see that on a cumulative year-on-year basis, fixed asset investment is currently in negative territory in China. Overall, the ongoing problems with China's housing market is continuing to weigh on the domestic economy. The destruction in property-related wealth has hit consumer confidence in China and continues to weigh on consumer spending. And we're continuing to see sharp falls in real estate investment in China as well, which has been weighing quite heavily on the fixed asset investment numbers. And we're also seeing the Chinese government push back somewhat on overcapacity in some manufacturing sectors, which also seems to be weighing to some extent on the fixed asset investment numbers. Overall, the Chinese economy should be able to grow by the government's target of around 5% in 2025. But major institutions like the IMF and World Bank are expecting growth to slow to 4.2% in 2026, amid ongoing problems in the housing market and given the higher US tariffs. There's been some media mention recently that China may step up its stimulus for the housing market. If that was to occur, that could perhaps provide some upside risks for Chinese growth in 2026. But downside risks could perhaps come if other countries begin to raise trade barriers against Chinese exports, We've already seen some signs of that happening in Europe. And just finally, in terms of the economies, looking at the world's third largest economy, the euro area's largest economy, Germany, has been facing many challenges in recent years. The big increase in energy prices after Russia invaded Ukraine has made parts of Germany's manufacturing industry uncompetitive. And Germany's all-important car industry is facing massive competitive pressures from China's electrical vehicle industries. And the big increase in US tariffs this year has been another major problem for the German and euro area economies. That being said, the euro area has shown some resilience this year. And you can see why from some of the charts on this page. The unemployment rate in euro area still remains close to record lows, which provides some support to consumers. And inflation has fallen very, very sharply in the euro area, which has meant households are benefiting from positive real income growth. And the fallback in inflation has allowed the European Central Bank to cut interest rates quite aggressively over the last 12 months. Overall, the euro area economy is probably going to grow just over 1% this year, and a similar pace of expansion seems likely in 2026. On the positive side next year, you've got easier monetary policy and easier fiscal policy in Germany. But obviously on the negative side, you've got higher US tariffs and increasing competitive pressures from China. Very briefly, as we've moved through this year, the IMF has become less pessimistic in its forecasts for the global economy. The turquoise bars show its forecasts for global growth for 2025 and 2026. It's expecting growth of around 3%, which whilst not terrible, is still meaningfully below the average over recent decades. And I think the risks to this forecast, as I mentioned, are very much on the downside at the present times. Global trade developments are a key downside risk, as are geopolitics. And I think financial market developments are another important risk as well. You can see from the left-hand side chart, 30-year US Treasury yields are back at levels we saw before the great financial crisis. If we were to get a material move higher in US Treasury yields, perhaps if foreign investors become increasingly cautious about investing in US assets, that would be quite negative for the US and global economies. And also, many people are talking about a potential bubble in the US stock market due to AI. If we were to get a sharp correction in asset prices, that's another important downside risk for the global economy as well. So, just to conclude, 2025 has been a monumental year for international trade, with a big increase in US tariffs. Trade policy uncertainty has moderated from its peaks, but it still remains elevated. The global economy has proved more resilient than expected, but there's a risk of some slowing in global growth over the next few quarters. The overall risks remain on the downside, with developments in the US economy and policy, as well as international trade and geopolitics, remaining key areas of uncertainty. In a world of heightened uncertainty, businesses and accountants should continue to hope for the best, but prepare for the worst. Thank you very much.
Thank you, Jonathan. It's very interesting presentation. And if we look at your first two slides, whereby you show the graph of the uncertainty increasing, and then again, for the tariff increasing, that, all the graph shows sudden spike. That's very interesting, and which creates a ripple in the global economy. So I would say that's an enormous butterfly effect for the global economy. So I think the data clearly illustrates the heightened risks we face, And now I'd like to bring Dr. Don directly into the conversation now. Dr. Don, you've heard Jonathan's assessment of the global risks, I would say the fear indices, and perhaps also the hope indices. And also we hear from Jonathan, there's a pressure on supply chains. So to kick us off, what are your current thoughts on the state of play in the global economy and in the Asia Pacific region as whole? Does Jonathan global data align with what you are seeing on the ground here in ASEAN? Please, Dr. Don, floor is yours.
Good afternoon. Thank you very much for having me here. Can you hear me clearly?
Yes.
Indeed, I fully agree with what Jonathan has mentioned. In his very first slide, I can see two important keywords that capture the situation very well. The first one is risks, and the second one is resilience. So we see on one side, this time is marked with heightened uncertainties. We have political wars, we have economic confrontations. We see increasing popularity of anti-globalization moves. But so far from statistics, we can see that countries have shown resilience. Growth has slowed down, but still it's positive. And especially for Asia Pacific region, I remember in one slide, Jonathan also shows that it seems that businesses are quite positive and optimistic about the prospects in the Asia Pacific, much higher than other regions. So it's also backed up by the statistics that if we look at, for example, in ASEAN, for example, the GDP projected by IMF for the global is around 3%, but for ASEAN, it's around 4.3%. So it's quite high compared to the global average. And then on trade and investment, amidst all this, I really haven't got ASEAN-wide statistics for 2025, but at least for 2024, for example, compared to the previous years, we still see that projects keep coming in and trade keeps increasing about 8 to 9% in 2024 compared to 2023. So perhaps in the coming year, in 2026, the US tariff impact will take time to be absorbed fully, and we may see some further slowdown. But in the long run, I would see that adaptation and adjustment would help to remain the resilience of the global economy, given especially that these days the economies are very much interconnected. Thank you.
Thank you, Dr. Don. So from your observation, then you agree with Jonathan that you see some kind of resilience in Southeast Asia, in perhaps in Asia region at large. So do you agree with that?
Yes, so we see resilience in the supply chain as well, because if we look at statistics from the value chain, we still see that the trade, let's say, for example, in parts and components in very sophisticated value chains still increase, and also the investment still comes in.
Okay, thank you, Dr. Don. Now I want to structure our discussion by looking at the opportunities, the risks, and the future outlook. So, Dr. Don, let's zoom in on the critical relationship between ASEAN and China, because Jonathan, he mentioned, and I think he waves in about, the importance of the China in its relationship with ASEAN. And of course, we understand that, China and ASEAN has a long-standing relationship. So as the US tightens trade restrictions and built higher tariffs walls against Beijing, we are seeing significant shifts in supply chains. So how do you see the intricacies of the ASEAN-China relationship evolving in this context? So do you have any view on that, Dr. Don?
Yeah, as you mentioned, China and ASEAN are important trade partners of each other. So I would see they will continue to strengthen this existing relationship and speed up collaboration initiatives. And the form of collaboration will be expanded, not only restricted to traditional areas such as manufacturing, but also emerging areas such as digital services and new technology.
Mm.
Now, to start first with ASEAN, both the US and China are very important for ASEAN as suppliers of inputs, of technology and jobs, but also as markets for final demand. So we are very much interconnected in the value chain. And in that sense, we will not and we cannot decouple from either of them. So I would see that ASEAN, on the one hand, would try to diversify the partnerships to reduce the risk, but on the other hand, they will also strengthen their relationship with China. Just last month, the ASEAN-China upgraded FTA was signed in KL in Kuala Lumpur, and both ASEAN and China are members of the RCEP, and they are also now discussing the potential expansion to include new members of the RCEP. So it will strengthen and further strengthen the collaboration and enhance the scope. Of course, these initiatives have started for some time before the heightened tension, but these rising geopolitical risks really helps speed up the process. And that's for the ASEAN side. Now, for China's side, ASEAN's provide big markets for final demands. We have almost 700 million people, still young and increasing population. ASEAN is also a large export market for China and increasing FDI's destination for China as well. And in terms of energy security, ASEAN is also important to China because about 80% of the oil and gas that China imports go through the Malacca Strait. So for both sides, they are very important partners. And what I see is Beijing has been pursuing what they call economic diplomacy. So using trade and investments as the tools to achieve its security and economic interest. Just earlier this year, President Xi Jinping visited 3 ASEAN countries, Malaysia, Vietnam, and Cambodia. In Vietnam, he signed 45 agreements. In Malaysia, over 30, and Cambodia, over 30, covering various areas of collaboration. So, and also we see China's expansion of infrastructure investment in ASEAN countries, like high-speed rail in Indonesia, Thailand, Laos, or the ports from Malaysia to Myanmar. And these projects also facilitate Chinese firms looking to expand to the region. So in short, what I can see is this dynamic of the relationship has shifted from a trade-centered to a more diversified forms.
Okay, interesting, Dr. Duan. So what we can see here is actually the Southeast Asia region is trying to play the balance between these two pendulum, I would say, US on one side, China, or perhaps I would say East Asia on other side. So are we seeing deeper economic integration where ASEAN becomes a connector for Chinese goods? And do you think that this creates new risks for our region in terms of facing US scrutiny on rules of origin or transshipments? Because I think now the discourses, perhaps in a market or in a discussion or in seminar, we are discussing about transshipment. So do you have any view on that, Dr. Don?
Okay, so the first point, are we becoming a connector? Not really.
Okay.
And are we facing new risks of being scrutinized by our role? Yes, but this isn't easy to address. Now, let me start with the first point on the connector. As I mentioned earlier, China-ASEAN relationship is deeper than just being a connector type. But I guess being a connector, we can think about 2 aspects. The first is the rerouting or the transshipment that we often talk about, which means a goods was exported is exported from China to ASEAN, and then from ASEAN to be re-exported to the US with very little value added generated in ASEAN. So you import the goods and you export the same one, re-exported the same one to the US. We do observe that rerouting, like look at the case of Vietnam in the 2018 US-China trade war. Some studies have documented that up to 15 or 20% of goods exported to Vietnam and then from Vietnam to the US from China at that time are actually transshipment goods. So they just come to Vietnam in order to avoid the US tariff. But now virtually all countries become the target of US tariff. So I would say that rerouting is not an incentive, is not that strong. The incentive for rerouting is not that strong anymore. And also, like even in Vietnam case, if you look, we have about 20% rerouting, but then 80% left is actually goods exported that are produced in Vietnam. So connector, in the sense of rerouting, I think that it would be limited, and it's not. It's countries and firms do not have such a strong incentive compared to the Trump 1.0 version, because at that time only China was the main target, but this time like a lot of countries are involved. What I would think is a more sophisticated and complicated form is the value chain participation. If you think of it as a kind of more complicated connector, because if you look from the value chain perspective, then ASEAN import inputs from China and process final goods to export to the US, then yes, we see a much stronger reliance of ASEAN on imported inputs from China. And this has nothing to do with rerouting. It's driven by the M&Es. Think of, say, electronics, or automotives, or textiles, or smartphones. So these are complicated value chains that involve many countries, many firms, and it's driven by FDI. Say, for example, electronics. Over 50% of ASEAN electronics exports are foreign value added. So within like $100 exported to the US, then over $50 are from imported intermediates. And China, together with Japan, are the biggest contributors of this proportion. In textiles, well, let's say ASEAN foreign value added is about 30%, and China is also the largest contributors. And for the case of Vietnam, for example, there are some studies showing that 70%, so 2/3 of fabric demand of Vietnam is from China. So this kind of value chain dependency will be more challenging to address. China's huge, they have natural resources, they have technology, they have the economies of scale, they can produce in huge quantity at a very competitive price. So this reliance is very difficult to address. And in order to satisfy the US ROO, it requires not only just compliance in terms of paperwork, but also an adjustment in terms of technology and the use of imports, which imported inputs, which can create also a bigger challenge for companies.
Thank you, Dr. Duan. So I think your explanation clarified much on the discourses about the transshipments, because as per what you explained, that actually the relationship between ASEAN and China is deeper than just rerouting, as per your terminology that you just shared with us. Because, actually these two regions, these two economic blocks, actually they are relying on the deep value chain. So I think it supports much of the relationship between China and ASEAN. So now I'd like to move to the broader block. So how do you see the economic prospects for ASEAN in 2026? Specifically, do you have particular thoughts on the large economies such as Indonesia, Singapore, Malaysia, the Philippines, Thailand, and Vietnam, especially in light of the recent trade agreements some of them have signed with the US? Dr. Duan?
Yeah, thank you. So again, I come back to this IMF projection of ASEAN annual growth for 2026 at 4.3%. So still it's more optimistic than global average at 3%, even though it's slower than the pre-pandemic rates. But it shows resilience amid all this turmoil that is happening. Now, for the countries you mentioned, they have different strengths and vulnerability because they are dependent on the US markets to a different extent, and they also have different competitive advantage. But I would say that the overall prospects look fine. Indonesia, for example, it's endowed with very rich natural resources. So commodity exports is one big chunk. And Indonesia has this built-in resilience because they have a domestic demand. About over 50% of the GDP is contributed by domestic demand, and the population is still growing and young. So have this kind of buffer or built-in resilience to reduce the impact of external shocks. So Vietnam is different. Vietnam is highly dependent on exports, and 40% of our exports go to the US. So Vietnam is, and also we are highly dependent on imports of intermediate inputs from China. So it's more difficult for Vietnam, and more challenging for Vietnam to navigate around this. But we just recently have a new administration, and they also have introduced a lot of reforms that hopefully will support the economy to continue robust growth. Now, Singapore is very diverse. It has a very strong services sector, and also it's a trade hub and a tech hub. So I will see that. And in terms of tariffs, Singapore are less affected as well, as directly affected. So I still see that Singapore's would be fine. Malaysia's is the export hub, very strong in. It has a mature semiconductor sector. Thailand's tourism has recovered after COVID. This high US tariff could be a drag in the growth. So it could, So it would be it would raise some challenges, but still. And now, even if countries pursue bilateral arrangement with the US, which also helps to provide some clarity, but we know that it's very much unpredictable anyway, and they have to follow very strict compliance, to spend efforts on origin verification, and also they have to face supply chain constraints. So this, to achieve the growth, this will depend on how well ASEAN countries can adjust their industrial policies and diversify markets away from the US exposure.
Okay, so I think that's the challenge, to diversify the ASEAN countries' reliance on US, and perhaps, as what we discussed earlier, ASEAN countries have to play the balance between US, China, and now perhaps Japan. So now I'd like to move our discussion about Japan. So we also have new leadership in Tokyo under Prime Minister Sanae Takaichi. Japan is a historic investor in our region. And we understand that, for some countries like Indonesia and perhaps Thailand and maybe Malaysia, these countries historically, their economies were supported by Japan industry in their early days of their economy. And perhaps, for Indonesia, because maybe I'm more familiar with Indonesian economy, in the beginning of the Suharto era, Japan played a high role in supporting Indonesian economy. So how do you see the relationship between ASEAN and Japan evolving to meet the challenge, especially, after the US tariffs? Again, I think I have to focus on you, Dr. Duan, because you have quite fast views on, the ASEAN economies.
Yeah, thank you. So similar to China, Japan is also a very important trade and investment partnership. As you mentioned, they have set foot on ASEAN region, Thailand, Indonesia for a long time. And they are among the biggest trade partners and also the biggest FDI investors in this region. So similar to China, I would expect a deeper cooperation, but it would be more diverse. So instead of just trade and investment focused, now we see from the new administration the emphasis on economic security, supply chain resilience, and high-tech corporations. And AI and semiconductors are also among the priority sectors under the new government. So I will see more prospects for collaboration, but maybe in deeper and the form would be shifted. For example, traditionally, Japan supports ASEAN countries through ODA or direct investment, but now they're looking on more co-investment, for example, like co-financing for industrial parks and energy and high-tech projects, and then also deepening the institutional collaboration, for example, by leveraging the ASEAN-Japan Comprehensive Strategic Partnership, focusing on some sectors. And also there are some emerging areas that are of interest to Japan, such as energy security and digital development. So these are the areas that we would expect to see more collaboration in addition to the traditional trade and investment form that Japan and ASEAN have been done. But just one more thing, there could be a more challenge to Japan compared to China. That is, Japan, like Korea, is very much is closest allies of the US in the region. So they may also be constrained by some direction or influence from the US in terms of economic cooperation. Thank you.
Yeah, thank you, Dr. Duan. So do you think that, with different background between Japan and China, as what you mentioned, that Japan probably is closer to US, then when ASEAN and Japan are trying to create a joint agenda or effort, so do you think that their joint effort or the joint agenda will be less effective if we compare perhaps ASEAN has a joint agenda with China? So do you think so, Dr. Duan?
I think each country has their strengths, so I would not say that it's less effective, because effectiveness also depends on how you implement. We have a lot of initiatives, but some are not well implemented compared to others. So it's I think it's not directly comparable.
Okay. Okay, thank you, Dr. Duan. So now we come to the second segment of our discussion. It's about the risks and resilience. I think, we have repeatedly discussed, and, perhaps Dr. Duan and also Jonathan mentioned in the presentation earlier on that, the region, the ASEAN and Asia region at large has resilience. So now I want to return to you, Jonathan. So it's easy to be pessimistic, but are there any upside risks to speak of that could put the global economy on healthier path in 2026? Could there actually be any positive developments that could ultimately come out of this major global trade disruption? So what you take on that, Jonathan?
Yeah, they're very good questions. I think in terms of upside risks in 2026, I think there's a possibility we get an upside surprise in terms of the US economic performance. I think obviously there's quite a lot of uncertainty regarding this Supreme Court decision in the US about the legality of President Trump's tariffs. But if the decision goes in his favor, I think it's important to state in November next year, President Trump's got really, really important congressional elections. So he wants the economy on as firm a footing as possible next year. So there's a very good chance if he wins the Supreme Court case, he may want to move on from many of these trade fights. He wants the economy on as strong a footing as possible. So he may move on from the trade fights. So that means you may get some reduction in trade-related uncertainty, which would obviously be helpful for the US economy. At the same time, some of the measures in the One Big Beautiful Bill, the stimulus package Congress agreed earlier this year, are likely to help the economy in 2026, particularly on the business investment side. So that could be quite supportive as well. And some of the deregulation measures enacted by the Trump administration in areas like energy and finance could begin to bear fruit next year as well. So I think we certainly shouldn't rule out an upside surprise on the US economy next year, particularly if we still get a continuation of the AI boom as well. And obviously, in terms of the AI boom, if we were to get clearer evidence next year that investment in AI is boosting firm-level productivity, and probably the US is the first area we're likely to see that. If we do get firmer evidence on that, you could really get an acceleration in corporate capex in countries such as the US, and it would boost business sentiment. So I think that's some clear potential upside possibilities next year. And I think your other question, could any good come out of these major trade-related disruptions? And I think obviously most of us have focused primarily on the downside, but over the medium term, some good potentially could come out of it. I think many economies have been probably too much focused in their business models on exports to the US. And I think given the higher US tariffs, it's forcing many countries to reassess their business model and put in place reforms. Canada's a great example. In Canada, there's not that much intra-provincial trade because the provinces export more to the US. So the Canadian government's putting in measures to try and reduce barriers to trade between its different provinces. And we could see that in different countries around the world as well. In Europe, the barriers to internal trade in the EU are equivalent to really high tariff rates. So there's probably going to be pressure in the EU as well to try and remove some of these barriers. So, some of these reforms, what are sort of being forced on countries, could help their long-term economic performance. And India is another country, traditionally really, really high tariff rates. And India's been sort of forced to some extent to accelerate tariff rate cuts to get trade deals with different countries, including the US. And I think ultimately lower tariffs in India could actually improve the economy's overall economic performance over time. And just finally, we do still have some countries around the world which have got low government debts, such as Germany and Canada. And I think given the pressure coming from US tariffs, it's forcing these countries to use their fiscal space, to increase investment in infrastructure and things like that. So once again, could help lead to a more balanced global economy over the medium to longer term. So that there are some potential upsides.
So you mentioned that in the medium term, because of this U.S. tariffs and the U.S. Trade restrictions, some of the countries, some of the economies, and even the business, they have to reassess, and perhaps they have to reformat their business model. So are you saying that, with this U.S. tariff restrictions and trade restriction and tariff imposement, so do you think that, for these economies, for these countries, they have to be pushed to create some kind of economic diversification, Jonathan?
I think often in life, my experience has been with many economies, it takes external pressure in many cases to make governments want to do reforms, and sometimes external pressures can allow you to push back against domestic political pressures. So, like I say, what's happening with global trade is a negative and it's problematic for the global economy. But there are some positives. I think it puts pressure on countries to make reforms that they wouldn't otherwise do. And don't get me wrong, many reforms may still not be able to be made. Europe has found it hard to put in place reforms, but I think we are already seeing signs in some countries that they are beginning to alter their business models. So a few positives out there.
Okay, all right, thank you, Jonathan. Dr. Duan, I want to come back to you because Jonathan earlier he mentioned about the investment in technology and also the AI emergence. So, what do you think of the impact of an AI bubble bursting for the ASEAN region? So I don't know whether this question is right for you, but do you have any view on that? Perhaps now AI and digitalization becomes the new word for us to converse, and perhaps now it becomes another driver for the technology and for the business across the globe, and perhaps also in the Southeast Asia. So do you think that you see the same thing in Asia, Southeast Asia?
Yeah, thank you very much. So I think AI is
Dr. Duan, so are you there?
young, but it the development. So what I think is, of course, the direct impact if such a burst happens is the impact on certain that rely on AI, for example, semiconductors, electronics manufacturing. And also, if such a collapse happens, it would reduce global demand for chips, data centers, and hardware. So it would impact ASEAN's semiconductor hubs. For example,
Malaysia.
It has a mature semiconductor sector. It has informed the plan to build to approve the plan to build about 143 data centers since 2021. So it may result in overcapacity or may reduce investment in AI and weaker exports. But in the medium term, then ASEAN countries may be able to get access to cheaper chips, and the cost for digital adoption may decline. And very much the extent of this impact will depend on the country's structure. Like the hardware-heavy economies may suffer more, but service-oriented digital economies may.
Dr. Don, sorry, I think your connection is not really stable.
So I would not.
Okay, so perhaps while we are waiting Dr. Duan's connections to be stable.
Sorry, can you hear me now?
Yes, yes. Yeah, I think we are missing your last bits, please.
Okay, so what I'm saying is I think AI has so much potential to continue developing. So such a huge bubble as we see with the dollar is unlikely. But if such bubble burst then the first, maybe in the short term, it will result in overcapacity and slower investment, as well as weaker exports for countries that are dependent on this, such as Malaysia. But on the other hand, it also creates, in the longer term, more opportunities to get access to cheaper chips, or can be so the net impact really depends on the country's economic structure, whether they are hardware heavy economies or they are more service oriented economy. Thank you.
Okay, thank you, Dr. Duan. So now we are coming to the last questions for this section for the risk and resilience. So I think we need to touch a little bit about US dollar and debts. So I want to come back to Jonathan. So I have two critical financial questions to you, Jonathan, if you don't mind. With all the major policy changes we are seeing from President Trump, is the US dollar at risk of losing its status of the world reserve currency? So what do you think of this statement?
I wouldn't see the US dollar losing its reserve currency status anytime soon, in my opinion. I think ultimately there's no real replacement for the US dollar. You know, the US has got, you know, some unique attributes: the world's strongest economy, the world's largest economy, strong rule of law, open capital accounts, and it's got really deep and liquid financial markets, and it's got the world's strongest military. So I suspect the US dollar is going to remain the world's reserve currency for the foreseeable future. But I think the prominence of the US dollar is likely to reduce over time. And I think perhaps what could be the events that would make the US dollar, you know, the prominence of the US dollar, the demise of the US dollar accelerate? Perhaps if the President Trump was to basically make the Federal Reserve de facto no longer independent. I think in such a scenario, foreign investors would lose confidence in investing in US assets, and that could accelerate the demise of the US's dollar status. But I think central case scenario, the US dollar is going to remain the major global currency for the foreseeable future.
Okay, all right, thank you, Jonathan. Given very high levels of government debt, is there a risk of sovereign debt crisis in an advanced economy in the future? So what do you think about that?
Yeah, certainly can't rule that out. You know, when you look at countries like the US, UK, and France, you've got very high government debt levels at a time when the population's beginning to age quite significantly. And at the present time, there just doesn't look to be the political will to make the difficult decisions to get the spending, the government debts on a more sustainable path. So, you know, you can't rule out the risk of a crisis in the future, particularly, you know, say in countries like the UK and France. And I think perhaps the risk would increase if in future elections you get a victory from a populist party, such as in France or in the UK. If a populist party won the election and it looked as though, you know, it was showing very little commitment to fiscal credibility, in that scenario, the risk would be of potential some type of harsh fiscal adjustment forced on these countries by global financial markets. Yeah, so there is a risk in the future.
So, but do you think that, you know, we should be optimistic that at least, you know, for the government debt crisis, like what we saw in 2030, you know, in Europe, will not happen in a near time, perhaps in next 5 years because of, you know, the current turbulence?
I don't think we can rule out a debt crisis in the next 5 years. Certainly not. And I think politics, like I said, could be a driver. If you get the victory of a populist party in a country that's stepping up spending and has shown no commitment to getting the fiscal house in order. So you could, in such a scenario, a country could have a very sharp fall in its currency, big sharp upward move in government bond yields, and the government would have to take necessary adjustments under pressure. So no, we can't rule out a crisis in the next 5 years.
Okay, thank you, Jonathan. Dr. Don, are you already back?
Yes, I'm back. Sorry.
Okay, no problem. So now we can continue to the last segment of our discussion. Is about the sustainability, about the long-term view. So thankfully that you already come back, Dr. Jonathan. So Dr. Don. So I want to address major long-term issue. ASEAN is projected to become the world's 4th largest economy by 2030. But yet climate and nature-related risks pose real threats to that trajectory. So I don't know if you can answer this, Dr. Duan. So how do you see this risk shaping ASEAN economic future? Because perhaps we can see, some of the initiatives in Southeast Asia countries and even the ASEAN as organization to advocate about the sustainability issues.
Yeah, thank you very much. So we experience natural disasters all the time, but it seems to me that it has become more and more intense recently. And I'm not an expert on this field, but I do read some report. They show a really shocking estimate that in the worst scenario, the high impact scenario, they project that the GDP in developing Asia can decline as much as 17% by 27. Yeah, so about 45 years from now. And for some especially vulnerable countries like Vietnam or Indonesia or Philippines, this figure is even much larger, to up to about 30% of GDP decline because of this climate issue. So I think that countries are well aware of the potential impact, but then there's a big trade-off between short-term economic costs and climate financing. Let's say think, maybe you know better on Indonesia. We talk a lot about deforestation, but then you have palm oil that facilitate the living of over 16 million people in some estimate, including the indirect workers. And then on the mining sector, it also creates a lot of jobs. So this social security is another important consideration in addition to climate financing. And then to apply renewable energy, you need money, you need technology. And this issue is not national because climate change is not bounded within the national border. It's an international issue, so it requires international cooperation. Now you're asking me whether countries are doing enough. These countries are sufferers, but they're also the contributors to this crisis. And as I said, I believe they have the plans, they have the awareness, but the challenges mean that it would take time to find the finance, how to have a sustainable model of financing. The ADB report estimates that ASEAN would need around 3.7 trillion US dollars by 2030 to sustain growth while factoring in climate change. And then in ASEAN, they also have plans for renewable energy, for resilience. They have a climate action roadmap. They have the circular economy initiatives. But again, this the financing part is very challenging. And then in like ASEAN's infrastructure, like roads and power and transport, is also not climate proofed. So they're very prone to damage following natural disasters. And then you have pressure also from developed partners because of the tightening ESG standards like the UEC ban or the due diligence requirements. So it's a big challenge for ASEAN. They would need to address, but I think it would take time and a lot more efforts, but it's slowly moving. Thank you.
Thank you, Dr. Duan. So perhaps I'd like to invite a few questions, perhaps a couple of questions from the audience. So is there any questions from the audience? Perhaps you can, like typing on the chat room. I haven't seen any questions though. Okay, so maybe everyone has quite understand about the discussions that going on. So perhaps now, before we closing the event, the webinar, so I'd like to ask Jonathan about your view, because we know that US has perhaps, like withdraw some of the initiatives from the climate initiatives. And do you think that, you have still important role in leading the sustainability initiatives globally, Jonathan?
Well, I think that's a very good question. I think obviously under the current administration, the US role is going to be diminished somewhat, isn't it? Given its focus on fossil fuels. But obviously, I think important to bear in mind that the politics will change again in the US at some point. So I think probably a new US administration, if it's from the Democratic side, is probably going to lead to the US, joining the global climate fight once again. So obviously politics is important, but I think the US is probably going to like to re-engage at some point in the future. And obviously the US will continue to make contributions to reducing its own emissions through, technological improvements, and increasing its use of renewables as well. So I think that trend will continue at a slower pace than we previously expected. But I think, the US usage of renewables will continue to increase. So it will continue to make a contribution, much less than previously expected. Although let's not get too negative, because a new administration, particularly if it's a Democrat in the future, is probably going to bring the US back into the fold.
Thank you, Jonathan. So I can see one question from the audience. It's from Mr. Surya Brahmana. How is the EU plays role in these major changes on the US trade policy? Will it help ASEAN? So perhaps, Jonathan, would you like to answer that? Your view on this UA policy lately?
Well, I think obviously, I'm not completely sure about the angle of the question, but I think one thing with the EU is obviously with higher US tariffs, the EU is looking for more trading partners now. It looks as though it's finalized the deal with the countries in South America, and it looks as though the EU is probably going to want stronger trade relations with ASEAN. So I think that is an opportunity for the ASEAN region in the future, some type of trade agreement between the EU and ASEAN. There's been talk about perhaps some type of agreement between the EU and the CTPP countries. So I think that's a possibility for the future, certainly. Obviously, the EU would be a big market for the ASEAN if they can strengthen trade relations.
Thank you, Jonathan. So as we are reaching the end of our event, so would you like to, perhaps from Jonathan and Dr. Don, perhaps would you like to give us some of your takeaways for the audience on our topics of discussion today? So is there any closing remarks from you, Jonathan, Dr. Don?
I think just from my perspective, I said, global growth, will be okay, but the risks are on the downside in 2026. But I think probably to end on a more positive note for me, like I said, don't rule out upside risks in 2026, particularly perhaps driven by the US economy.
Thank you, Jonathan. Dr. Duan, do you have anything for us?
Thank you very much. So I just would like to second Jonathan's earlier point about this tension and this uncertainty to serve as a wake-up call for countries to really speed up their domestic reforms. So looking on the bright side, there are challenges, but I hope also, I think it will also be a good opportunity for countries to really strengthen the domestic capacity. So let's see what statistics show.
Okay, thank you. Thank you, Dr. Duan. So, ladies and gentlemen, now we are almost out of time. It's very interesting discussions that we are having today. So to summarize today, at least I have 3 points of notes that I have here. So first, the landscape. We are navigating a historic shift in US trade policy, but new agreements with nations like Vietnam and Thailand show ASEAN is adapting. Secondly, the risk. From sovereign debt in the West to the transshipment risk in the East, the challenges are real. But as what we are having in the discussion today, everything is on track, at least for ASEAN and Southeast Asia countries. The action, thirdly about the action, resilience, diversifications, whether with China or Japan or other important trading and economic bloc, is our commitment to sustainability and are the only ways to secure our growth to 2030, because that's the objective for the ASEAN, for the whole economy in this region. So Jonathan, Dr. Don, thank you for your sharp insights. Thank you for having time with us. And on behalf of the ASEAN Federation of Accountants, we'd like to thank you for your sharing, for your great insights. And hopefully this can be used by our professional accountant organizations, because we are not just, dealing with accountancy. We also need to have view on the global macroeconomic perspective, so that we can have more we can have stronger role. So as what we understand that now accountant is not just the number cruncher, but we also have the professions that drives the value for the economy, for the business, finance, and society. Again, thank you very much for your time, Jonathan, Dr. Duan, and everyone. And for the recording, you can visit our AFA YouTube. And also we have some of the news channels and social media channels that you can visit in LinkedIn and our website. Thank you again. And please wait for our other beneficial and insightful events in other opportunity in the future. Thank you very much.
Thank you very much.
Thank you, Jonathan. Thank you, Dr.
Thank you all. Thank you. Bye.
Thank you very much.
Thank you, Monica. Bye-bye.
Bye. Ladies and gentlemen,
you.
we would like to also invite you to kindly complete the survey. The link is already on the chat box to obtain the e-certificate. Thank you.